Hey guys, thanks for joining me in this video. In this particular one, I just want to bring you some updates about the stocks that I track on this channel. Lately, I've been quite busy, with a lot of trading activities that I've not really had enough time to give you guys this information that are developing. One of the stocks I'll be starting with is General Electric, followed by Boeing, followed by Southwest Airlines. I'll try to make the video as focused and concise as much as possible without leaving any information out. Lately, the stock market has been taking a dive for a lot of reasons, and I'm not just going to be going over those reasons with you because, they're out there. But the key thing here is this, in a situation like this, what are we supposed to do and how we're supposed to go about trading in this type of market? Of course, I'm not a day trader, so I'm not really looking for the, quick gains here and there as some people do. Now, for me, in this situation, I'm focusing on the ones that I believe in that will do well long term. And I hope that that's what you're doing as well. And, just put your money into them as you have them. You just dollar cost average into those companies or into those stocks. And, over time, the market will correct itself and things will turn around again. This type of correction is normal in the stock market. And I don't think you should be panicking if your portfolio is in the red for now. Believe it, it's always temporary and it won't last for too long. All right, let's start with General Electric. Right now, General Electric trades for around $13 and it's down about 2.4% for today. And obviously, it's still going through, the whole market downtrend that we're experiencing right now. So I'm not really bothered about it. But here's what I wanted to say about General Electric. We know that they've been working on the reverse stock split, and they just recently concluded their annual meeting that was held on May 4th.
Larry, we received several questions about the benefits of doing a reverse stock split, with people also asking why the board chose a ratio of 1 to 8 and whether the board considered share repurchases as an alternative or an accompaniment to a reverse stock split.
But to put it simply, GE has almost 9 billion shares outstanding, which is the highest number for companies of our size in the S&P 500. About two-thirds of the companies approximately our size in the S&P 500 have less than 1 billion shares outstanding. We've undergone significant transformation over the years, but our share count doesn't yet reflect our journey to simplify and make GE a more focused company. A 1-for-8 reverse stock split would reduce our numbers of shares outstanding to closer to 1 billion, which would put us more in line with companies like ourselves, while keeping the value of our investors' holdings the same. If this proposal passes on the shareholder vote at today's meeting, the board will have the authority to set a date for the reverse stock split during the next year. On the part of the question about share repurchases, while that would be another way to reduce the outstanding share count, it would be one that requires GE to deploy capital to buy shares back from holders. Share buybacks just haven't been a part of our capital allocation strategy in recent years.
Approval of reverse stock split and reduction in our authorized stock and par value, or 96.9% of shares voted, which is 62.1% of shares outstanding, and against 3.1%.
The next stock that I would like to cover right now is Southwest Airlines. Southwest Airlines LUV ticker symbol is trading for around $59.67 right now, and it's down about 2.75% and about 1.68% in the week, and in a month it's down about 5%. Now, Southwest Airlines is one of those that I strongly believe in long term. They've had a very good business, very good structure of flying. And I'm not worried about this type of downtrend. I said in my last video about Southwest Airlines, I actually stated that Southwest Airlines was actually getting to its, I would say its peak price that it's really touched in the past, 3 years now. That's around $65 per share. And when it crossed around $63, I knew that, it wouldn't probably get enough momentum to break through that $65 share price. Obviously, there's a lot going on in the market right now. And added to that is the fact that the Boeing 737 MAX issues that was recently discovered about the electrical problems, some of the airplanes do have. So, all of that mixed into this picture will be pulling that Southwest Airlines stocks down. And this is one of the information that was shared about Southwest Airlines. It says here, Southwest Airlines is only 77% below its all-time high Friday's action may indicate the stock is about to take another run back towards the December 21st, 2017 all-time high of 66.99. I believe in Southwest being able to make a recovery if the market starts to turn around. Okay, so I'm not worried about this type of downtrend or this temporary pullback in the market. The next one I'll be covering is Boeing. Like I already mentioned about the 737 MAX electrical problems that was recently discovered. This is one stock that is being beaten so much, you know. In the last 1 month, Boeing is down about 9%. And if we go back to 5-year chart, you can see that Boeing at some point in 2019 was trading for about $424. So the point here is there's a lot going on with Boeing, with a lot of potential as long as things starts to recover with the company itself. The company itself is going through a lot of issues, which 737 MAX is bringing most of these issues for the company. So I hope that they figure out these electrical problems, although not all of the 737 MAX are affected by this electrical problem. But again, it's no good news for an airplane to have an electrical problem. So as long as they fix this soon, and again, the orders starts to come in, Boeing will start to rise again. Now, it is very important that we keep a cool head in this type of environment in which, you know, there's a lot of emotions, there's a lot of factors that are affecting the stock market. And this is one of the periods in which you can always find good sale or at least a good discount on the stocks you're interested in. So if you have enough money to put into the market that you know you don't really need and you are planning to invest long term, you should be considering buying the companies that you believe in long term. This is not the time to gamble into companies like GameStop that you're not really sure what will happen in the next 2 days or 3 days or even a week from now. But I'm talking about companies that you know that will do well long term. It doesn't have to be airline stocks, to be precise. It doesn't have to be airline stocks. There are some companies that I believe I'm seeing a lot of value in right now. One of them is Apple. Apple is pretty cheap for the price it's trading for. I believe that long term, these are the good companies that I would like to be buying when the sale is going on like today. I just wanted to bring this update to you guys. Like I said, I've been busy with a lot of activities, with work and with training. So I hope that you have found value in this one. It's quite short, and I hope that, I get to see you in my next video. If you haven't subscribed yet, please subscribe to the channel and also give this video a thumbs up.